Hey friends, this is Erwin Cito, and welcome to the Truth About Real Estate Investing show for Canadians, where it's my job to interview the top minds in real estate and business to uncover the strategies, mindsets, and the habits that actually work, especially in today's market. In today's episode, I'm joined by Ben Barry, a true industry heavyweight who successfully deployed over $2 billion, that's US dollars, into single-family rentals, build-to-rent, and commercial real estate assets. Ben's journey began during the depths of the 2009 global financial crisis, where he carved out his path in commercial real estate before pioneering large-scale single-family home acquisitions during the U.S. housing recovery. His leadership helped operationalize the mass acquisition, rehab, and management of thousands of homes backed by major Wall Street and Canadian institutional investors. Now, Ben is the Vice President of Acquisitions and Sales at Share, a platform revolutionizing the real estate investing by making U.S. rental property ownership simple, passive, and accessible, even to everyday Canadians. With boots on the ground and expertise in over 20 markets, from Florida to Texas, Georgia, North Carolina, Ohio, etc., Ben shares how institutional best practices are now being offered without the need to bring $50 million plus to the table. We also talk about why landlord-friendly states matter, how technology and data have transformed real estate investing, and how Canadians now invest just like the ultra-wealthy, and finally escape the tenant-friendly markets and find deals that actually make sense. If you're serious about real estate investing, this episode is an absolute must-listen. If you'd like to connect with Ben, you can go to iwin.sharesfr.com. Again, that's iwin.sharesfr.com, and click Schedule a Call. Please enjoy the show. Before we get to our guests, I want to take a quick second to share something valuable with you. If you're serious about building wealth through real estate but struggling to find profitable investments in Canada, I've got something that will help. I've put together a comprehensive guide to U.S. real estate investing for Canadians, breaking down the best markets, financing strategies, tax considerations, and landlord-friendly states where Canadians are getting better cash flow and long-term appreciation. It's completely free. You can grab your copy at www.truthAboutRealEstateInvesting.ca. Just look for it on the right side of the page. Along with the guide, you'll also get our weekly newsletter that goes out to over 10,000 Canadians at no charge since 2010. Yes, I've been sending it for every week since 2010. We send new podcast episodes as they're released, so you never miss out on these expert insights, invites to exclusive in-person and online events with top real estate minds, actionable strategies to help you grow your portfolio and build wealth faster. Again, go to www.truthAboutRealEstateInvesting.ca and download your free guide today. Now, please enjoy the show. Hi, Ben. Welcome to the show. Can you share a bit about your background and how you got started in real estate investing?
Sure. Yeah, I've been in the business since straight out of college. So I graduated university, I believe as Canadians refer to it, back in 2009. It was the middle of the global financial crisis. I had studied advertising, and at the time there were no advertising jobs out there for a young recent grad. And real estate had always been an interest of mine, and I wound up connecting with a commercial real estate brokerage, hiring investment sales brokers, and I didn't know any better and started working as a commercial real estate broker back then. Terrible time. The market was extremely down, one of the worst I've seen in decades, if not a century. But I didn't know any better. But I learned a lot, and after a couple of years of grinding that out and working commission only, realizing that it's going to be a couple more years, if not more, until this really becomes a viable business as a broker here. So I'm going to go find a salary job, and it led me to connect with a group that I helped start up with. That was one of the first housing funds that was starting to buy homes out of the housing crisis. So a lot of the American homes were highly distressed, foreclosures very high, and it was a fund that was going and buying up houses, turning them into rental properties at mass scale. And I started with them in acquisitions and helped them starting to buy homes and figure out how do we efficiently buy thousands of homes at scale, basically. So helping set up the processes, procedures, hiring, training, managing agents, and opening up new markets, and doing all those fun things and helping them grow. And that was really my kickstart into a single family rental business.
So here's a question you won't have the answer to, but I think it's an interesting for listeners' benefit. Do you want to hazard to guess? So the largest REIT in Canada, that of a holder of single family homes, Do you want to guess how many houses they hold in their portfolio? So this is so Canada, almost 40 million population, lots of houses in there. The largest REIT in Canada, largest holding by a REIT of single family homes. How big would you guess that portfolio is in terms of number of houses?
1,000.
It's under 600 houses. Versus you were trying to buy thousands at a time.
Correct. Yeah, we were trying to build a machine that help you buy one-off houses and deploy a lot of capital very quickly to buy thousands of houses.
Right. And do you remember the year you started? Because I'm because there's a famous Warren Buffett interview when he was on CNBC where he said, "I'd buy hundreds of single family homes if I could, if it was logistically feasible to do." I'm paraphrasing.
No,
Right? And that was 2012. Well,
right.
right.
I joined the firm in 2012, so it was kickstarting. It was one of the first. There were a number of other firms starting to do it, but yeah, it was Warren Buffett's logic was famously kind of referred back to as because housing pricing was so depressed given where values were traditionally at that it makes sense to go buy thousands of them. But at the time, managing thousands of houses seemed just impossible.
Well, it didn't exist at the time, right? I'm
Correct.
guessing. Yeah.
I mean, even when we were building things out, we were using your local regional property managers and trying to kind of piecemeal that together to manage these houses. And eventually, the business turned into internalizing the property management functions to manage that internally to manage, the properties in house with that many houses.
That's interesting. You mentioned regional property managers. We don't have regional property managers in Canada that work with not that work with retail investors, even folks with portfolio of like 10 houses, whatever doors. Because generally they're very. Well, I guess we do have regional property managers, but they're still maybe like 3 full-time staff, right?
I mean, I'd say that time, 10, 12 years ago, they weren't what they are today. I mean, now you do have third party managers that handle thousands and thousands of houses.
And for context, for the listeners' benefit, because appreciate it's really funny because I remember growing up, I forget what show, watching like late night Canadian talk show hosts, and they would tease Americans about how little they knew about Canada. Like name the president of Canada, like trick questions like that, stuff like that. And then we Canadians would laugh like, "Oh, Americans don't know nothing about Canada." In my own experience, Canadians don't know much about U.S. investing, and you're learning about that yourself as you speak to Canadians. Uh, can you speak to back in 2012 how much money, institutional money, big money, was pouring into real estate investing? Now, again, coming from the context of Canada, the largest holding of single family homes is under 600 houses. But that's the largest holding by a single REIT. I believe someone in Quebec might have 600 or 700, but still, we're talking like very, very small compared to what you're used to. Question is, can you paint a picture for the listener back in 2012 even? What was the amount of investment and who was pouring money into the real estate market in the US?
Well, I'll speak kind of specifically to the single family rental space where I was kind of intimately involved with. And, there were a handful of funds, all over $1 billion to start out with, of what they were going to deploy. And
Start with a billion. Okay, got it.
that got deployed, and then would recapitalize, different kind of debt structures and credit structures that would expand and expand. And those groups have grown and grown and have tens of thousands of homes now.
Mhm. And you're backed by Wall Street money.
Yeah, for the most
Yeah.
part.
Right.
Wall
And can you name the Canadian pension that was backing you as well?
I'm not sure on specifics there.
Okay,
So,
okay, okay. That's okay. We'll protect the innocent. So this is from your bio. You successfully deployed over $2 billion into single family rentals, build to rent, and commercial real estate assets. So what is it that drew you to this sector?
yeah, I mean, I mentioned earlier, I just was very interested in real estate. And then, going through that time out of college, you're just applying to lots and lots of different jobs. And you're like, okay, I could go sell payroll software or office equipment, but it didn't really excite me. I love real estate. I love that you're working about a structure, a building, maybe land, but it's just a large deal. And I like kind of working on large projects. And the single family rental business really interests me because it was new. It was emerging asset class. It became a very institutional recognized asset class, like office buildings or commercial or industrial are for a lot of groups. At the time, single family rentals were not, and it was building something that would be recognized as an institutional level asset class.
Now, tell us a bit about what it was like early days. Like how many were in the company when you started?
Yeah, I think I was one of 12 in our office, and we were kind of one of two offices. It was crazy.
and then
um,
and then that grew pretty quick, right?
Very quickly, yeah. So I mean, the way we work, we were reliant on third-party real estate agents and teams kind of in a market. So if I was managing one market, I probably have three teams of agents that are going out, scouring the MLS, finding deals, underwriting them, finding comps, everything support, emailing me a proposal, then I review, get an offer back to them, and doing that as fast and as efficiently as we could. Eventually, technology would come in and help that work a lot more efficiently. But yeah, it was it was rough in the beginning and kind of haphazard, but it was like many startups in many kind of fledgling industries. But it's grown and it's a very interesting, different place now.
We're also talking about exiting the financial crisis, and I don't know how geographically based you were because I know you're in Florida, which is kind of like the epicenter of the problems, right?
Yeah, I mean, a lot of the real estates. I mean, Florida, amongst other markets, Phoenix, Las Vegas. I don't know there are many markets immune to kind of the housing crisis. It was things shot up, things were built, and then kind of everything kind of plunged and fell. And then, that's kind of the opportunity where a lot of investors started buying houses out of foreclosure and REO and just short sales and all those sorts of kind of distressed maneuvers to start buying. And that kind of quickly led a lot of those states out of that kind of financial crisis was the real estate was then being propped up again. You had contractors going back to work, you had real estate agents transacting again, and the industry started building back up.
And you must have been inundated with leads because who else was buying at that time?
Well, it's funny you say that because there was probably half a dozen groups like ourselves, and so we're
Right,
basically ourselves.
right.
So you probably had your local fix and flip investors going to the county court steps to buy auction properties. If you're familiar with that process, um, and then eventually these funds came in and started kind of pushing those more regional and local guys out, and then became funds versus kind of other funds buying houses.
Mhm. So how paint a picture for the listener? Like how big were these teams now that you're running? Because you're how many properties would you say a week you were transacting on, like acquiring?
I'd say early days transacting. Now that I was one acquisition person. We probably had four or five, and that team would grow. And we would manage one to two markets, and those markets would probably have two to four teams of real estate agents. Uh, Kind of context it there. And deal flow. We made a lot of offers. Some, we were competitive. Some, we weren't. But it was more kind of a game of getting offers out as quickly as possible. And,
That's
and
before
kind of,
DocuSign days.
oh yeah, no, we had DocuSign. Thank goodness that.
Well, thank goodness.
Yeah, but in terms of, I mean, we are probably trying to do triple digits a month, not more than that. So 100 plus a month.
Yeah, so I think that so as like I was preparing you before the show, like nobody has experience doing that, acquiring 100 plus properties in a month, let alone a year, let alone a career. All right, so and now who were your clients? You've worked extensively with institutional investors, real estate investment trusts, hedge funds, even private equity firms, family offices, like, and now you're working for Share. First of all, tell us about working with like humongous money. Like, for example, how much money would one of these clients, investors have to bring to the table to play?
But the initial Wall Street funds were basically, they raised the fund and essentially all that money was to deploy, through them. They were investors, but it wasn't really kind of working with individual investors at that point. The industry kind of evolved in the second place I went, where we started working as the operating partner. So we would work with more of your hedge funds, private equity groups, family office that want to. At this point, this is probably God, probably 5 years after kind of that initial in 2012. So it's probably 2017.
Right.
Where now there's a lot
Things
more
are a bit more normal, right?
There's a lot more interest. So like, hey, this single family rental business is actually turned into something manageable. So that thing that Warren Buffett said, well, now it's actually manageable and you can deploy it. So that attracted a lot more people to the space. But they weren't going to go build a large operating like our operating platform like a lot of the initial funds did. So it was like an operating partner like us, where we would, we kind of advise, be like, hey, here's where we should buy, here's our buy box. We go source the deals, acquire them, rehab, and manage them. But they were essentially their deals. They sat on their balance sheet, so we just operated for them. And
Right.
that was kind of more of your smaller investors, but still pretty sizable amounts. Not the billions, but still significant amount of capital.
How much would an investor have to come to the table with before you'd speak to them?
Um, probably 50, 80 million in equity.
Okay, so pretty much half the listenership of this podcast. So 50 to 80 million dollars US dollars back in 2017, which is worth a lot more today. And then and yeah, I guess kind of bring it back to today now. How has this industry evolved?
Yeah, I mean it's interesting because it's a lot more efficient. I think you can get a lot more done with kind of fewer heads. Technologies taking huge leaps in way we acquire, way we can manage portfolios and properties.
Can you paint a picture of like who your property managers are? Because this is a very common question I get among my Canadian clients is because they're used to their context, mom and pop, you know, often one entrepreneur, one owner, couple contractors, right? Some part-time staff, maybe two full-time staff. Like, but that's generally what the max is for property managers here. You know enough about our local real estate, how hard it is to run these businesses. What? So you understand now. And then only large-scale property managers generally only work for or are in-house. So they're in-house for the REIT, right? Then there's very little in between, in my experience. Now, what was the property? What were the property managers like that you were working with?
Well, yeah, I mean there's kind of twofold there. So some of the larger funds in-house their own property management, so it was their property management company.
Mhm.
There grew large-scale property managers that would do the third-party management for other groups that would kind of roll up smaller groups under their umbrella, giving them more scale and efficiency. I mean, in terms of headcount, I mean, it's probably could be hundreds. It's corporate business at that point. You do have your regional leasing agent, maintenance people handling turns and maintenance, but it's scaled and it's under your umbrella. What that does is creates more efficiency to get things done quicker, leveraging technology. When your AC's out and you're in Florida, you want to get that fixed quickly, and making sure you've got someone that's taking your call, someone that's addressing that concern as quickly as possible, not calling my local property manager, hoping they pick up, and then hoping they can get an AC guy on the line that can come out and fix my property. It's a lot more efficient, much better experience for the resident and tenants.
So for my clients, I actually reviewed some of their due diligence documents, including like home inspections, and also, and then I'd always look at their contractor quotes as well. So here, I've done volume. I'm doing air quotes for people listening. I've done volume as well. I send a lot of referrals, being a realtor. So I'm used to like a two-page quote because and my contractors are often using some software, but I'm not getting a heck of a lot of detail. Versus when I got my quote for my house in San Antonio, it was like 70 pages, and there are pictures, and there was a description, and there was a dollar amount next to it. So I'd never seen this level of transparency and granularity. Um, and again, this was a like a culture shock to me because I've worked with contractors forever. Like my ex had a contracting business. They had a bathroom kitchen renovation business, so I was used to that. Right, that was the world. 1 page, 2 page quotes. That's it. So this whole like to see automation on this level, it was just a complete shock to me. Um, can you add to that? Like you're learning about the Canadian market yourself. What are some of these other differences that the Canadian investors aren't used to?
Well, I mean, that's a perfect example of where I was mentioning technology has advanced the field so much, because to buy at scale, you have to still inspect the property and, understand everything that's going into it. So that's why, we would get these scopes, rehab bills back of saying, okay, what do we need to do this property and understand without having to go walk it myself or go through it with an inspector or a contractor, getting those things back to you to make an intelligent decision as an acquisition person, help run the efficiencies. And that's kind of what has grown out to why, we can offer something like that to a share client that, is buying one, two, three, four, five houses, and getting that level of detail. And the efficiency in pricing is because they're utilizing the same contractors or maybe paint suppliers or flooring suppliers across a number of houses that are bringing that pricing down, giving more efficient and effective pricing.
So again, you've done $2 billion of acquisitions of houses. How many of them did somebody walk, like actually like go site visit? Because I'm asking because Canadian investors ask, do I go see the house? What do you say to that?
Yeah, I mean, we had boots on the ground. Somebody would walk, and we would generate an inspection report on every single house that was purchased. I personally did not walk all of them. There were a handful here and there. I'd be on a market tour and walk to some inspections, inspect neighborhoods and things like that. But no, I was not walking all of those houses personally, but relying on people that were doing inspections and building their scopes out.
Mhm. So again, you've worked for like Wall Street backed firms with billion plus money. Now you recently made the move to share, and you're now vice president of acquisitions and sales. What is it that attracted you to the role and to the company?
Yeah, kind of I mentioned earlier, I like kind of growing and kind of building out, a new kind of asset, new company. So I like what Share's doing. They're making real estate investment in the States very, very effective and very efficient. You can do it remotely, internationally, very passively, but still getting the effects and benefits of having a large scale operator behind you.
Now, in your experience, like how much money do you have to bring to the table to get this type of service?
I mean, to leverage kind of what Share's offering their clients, you'd
Right,
have to have a couple hundred homes, if not more, to really kind of get this level and the efficiencies that Share's offering.
right, and that's what when I first met Andrew, the CEO, co-founder of this company, I'm like, I'd never seen anything like this in Canada, and then you make it available to an everyday investor, and the everyday investor doesn't have to give up any equity.
Right.
Right. I don't know how much you can go into it. Like when you mentioned when you worked for an operating company in 2017, like what was the split between your company and the investor?
I mean, there's a fee model there, but the capital partners own houses outright.
And then can you talk to, does the fee structure that different between that company and Share?
I mean, somewhat, but I mean, I think they all operate under similar pretense of, the money coming behind is buying the house and owning the house outright. And then, service fees and, acquisition fees are tied to that for performance.
Very, very cool. But again, you have to come to the table with minimum 100 houses?
And then, yeah, I mean, I haven't had specific conversations recently of how many doors you would need, but it's
Right,
it's a big number. Well, I mean, it's a big number if you want to get, your costs down, because
right.
that's where the efficiency comes from, is having that scale.
And again, so my first reaction was, this is too good to be true. Are you getting that? I've gotten that. I gotten that a couple times. And the funny part is when sometimes I say, "Oh, the fees are too high." So I've heard both. So being in the middle isn't so bad if we truly are in the middle.
It's an easy sell, it feels like, because it's delivering something that hasn't been offered to but should be. It's easy real estate investment, and it's open to you, and you're getting the benefits of large scale companies without having to be a large scale company. And it's, coming from an environment where maybe you can't buy investment properties that easy, or if you do, you can't manage them efficiently, um, with problematic tenants. So, I think it's a great opportunity to open up to, your client base to utilize Share their platform.
I mentioned to you what property management looks like in my experience and where I am, and also I've had over 300 past guests of the show as well. So I've spoken to many people about their investment models and including like their structures and who manages for them, whatnot. And also before we were recording, I mentioned to you, I, I think every investor, at least in Ontario, needs to understand this before they decide to invest. So I've had the largest lobbyist in Canada, so the president of Federation of Rental Properties Ontario, FERPO, and he's also the acting president for Canadian Federation of Apartment Association. So he is the head of the two of the biggest lobbyist organizations representing apartment building owners. And a survey among apartment building owners in Ontario came back with if a tenant doesn't pay you rent from the time you service them notice, apply that they be evicted for non-payment, to enforcement, as in like they're removed from the property, is 7 to 7.5 months. Now again, that's largely institutional money. So this is like sophisticated professional investors, right? This isn't mom and pop. So mom and pops are like going way beyond 7 months for enforcement of non-payment of rent. What do you say to that? How does that fit into your world?
Blows my mind. I think it'd be very tough to operate and very tough to make a decent return, if any.
And have you seen anything like that before in your experience?
No, I mean we've always tended to operate in landlord-friendly states just to make sure those things work more efficiently. I run into some nightmare tenants here and there, but it's never been that long of a process to
Mhm.
get them.
So let's take a vanilla non-payment of rent in the markets that you've operated. Can you name some of the markets, and then what is the process to evict a non-paying tenant?
I believe it's 30-day, I think 30-day notice and then 90 days post, and then you get the sheriff out to evict. And it's going to vary a little bit, and I've gone through the process intimately to give you further detail, but I mean it's roughly a couple months to get somebody out, maybe a few months.
It's just culturally here in Ontario, it's the tenants all know they have all the rights.
That's well, and then I don't know how much social media has influenced it too, but we've seen people in the states that kind of promote ways to get around it, and aggressively go after kind of those sorts of those tactics, and protect ourselves against those.
Mhm. So for the listeners' benefit, what markets did you operate in that you felt were landlord friendly? And
I've probably operated in over 2 dozen markets throughout the time. A lot of the Sunbelt markets, Florida, Atlanta, Georgia, Carolinas, Alabama, Tennessee, Texas, Kansas City, and then some Midwestern markets: Kansas City, Oklahoma City, Ohio, Pittsburgh, Indianapolis. There's probably a few more there, Arkansas, but there's a few others in there. I'm sure I'm forgetting.
so you've been around.
Yep. You do that much, you tend to hit a lot of different markets.
And that's why I tell, and like in Canada, we're not really used to that, and having to have so many options
Mhm.
for at least having even a mid-sized city to invest in. Like for example, it was just big news yesterday. It's finalizing a massive bankruptcy. Uh, the small group of gentlemen were trying to become the biggest institutional owner of real estate in Ontario. I think they got to 600. Now they're all bankrupt. Yeah. Uh, understand like because the affordability is the way it is here, it's just so expensive. And also because we have basements in our houses because it's cold. So we have to build basements in order to compensate for frost lines, so that the property doesn't heave, whatnot. So a very common strategy, at least in Ontario and Alberta, is that we complete basements into apartments, into a complete separate apartment. When I first did mine, it was like $33,000 to do the conversion. Today's retail price is about 160,000. So prices have gone way up. It's an invasive renovation, so it takes time, and so we had folks trying to do this on scale in small towns of like 50,000 population, trying to do like 100 houses, right, in a short amount of time. So unfortunately, this thing's gone bankrupt. I forget where I was going with this, but what do you look for in a market? What do you look for in a market before you decide that's a good place to invest?
Obviously, friendly landlord laws first, and then It's a strong economy, diverse kind of workforce and industry, affordability, positive growth, in rents and appreciation and population. You want somewhere that people are moving to, not moving away from. And I think that's, good schools, another one. I think those are the main drivers to really kind of get a green light for a market to go into.
And now, they give you, and for the listeners' benefit as well. Actually, the New York posted an article about what would happen if Canada became the 51st state. Uh, Again, not getting into politics, just purely numbers. If Canada was to become the 51st state, I think we would be the fifth poorest state in terms of income, and based on housing, we'd be the fourth most expensive as a country. We have that kind of disparity. Can you talk to affordability in your target markets? Like, what kind of price points and rents are you looking for when you're thinking affordability?
Yeah, I mean it's probably that 2 to 300,000 price point, maybe a little higher, and it depends because it's just because that's the median price point in that area doesn't mean we're going to be paying that for that property. We're going to be looking to where the rents make sense. So where the rents and the pricing makes sense to where the yield is attractive to an investor. Maybe making sure there's enough supply. I mean, you can find a good area, but it might be tough to buy, and then you kind of can't grow there. So you want to find somewhere with enough supply to meet your demand.
In every city you've named, I think they all have a professional sports team as well.
Well, that's how I do my travel. Just
Oh yeah?
yeah, but it is. I think you do. Well, I think you see that with population size. I think there are some smaller markets. I think maybe Birmingham. I don't think has a team, but that may be one of a few. Little Rock, I don't think has a team.
Hmm.
Those are good little markets. I don't say little markets, but there's a good markets that maybe you don't hear in the headlines as much as your Atlanta's in Texas.
Can you talk to deal sourcing? How do you find properties?
That's secret. Can't say that. No. No, it's really been my specialty over my career is finding those special deals and finding those portfolios and such. And a lot of it's from relationship building. It's putting yourself out there. It's networking. It's finding the strategic relationships with who has the inventory of what we're trying to buy, and where does it make sense.
You mentioned relationships. Are these relationships with individual homeowners or like portfolio owners?
It's a good question. So I mean, it may be homeowners, but that homeowner is the portfolio homeowner. A lot of it is people, wholesalers, brokers, kind of in the States, single family rentals have become such a kind of asset class that you have portfolio brokers that are specializing in buying and selling portfolios of single family rentals. Much like, you probably have office building brokers or something in maybe Canada, like we do in the States. So it's its own asset class. So making sure that you're top of mind when they've got a portfolio coming to market, or maybe it's off market, making sure you're in front of them and they know you and they work with you and know you're easy to work with.
It's totally different up here. Like, for example, like wholesalers in the States, they do way more volume than ours do up here do.
Mhm.
And then you actually built some of these teams yourself, did you not?
Not so much wholesaling. Well, yeah, for a little bit we did. It was an internal. We did some direct marketing for a while, and then pivoted away from that. But yeah, we did a little bit of wholesaling. And I think again, it goes through kind of evolution of technology and being able to reach multiple markets and handle leads and business effectively and efficiently.
You talked to some ways you've seen technology improve real estate investing. Because again, up here, I don't see a ton of it. I don't see a lot of use of technology.
I mean, a lot of it is, how do you figure out what the rent's going to be? Utilizing technology that's looking at, past rental comps and kind of computing what rent should be, all the way to really going through large kind of tapes of homes and kind of using technology to basically kind of underwrite and tell you which homes are homes you should pursue or not pursue. Um, yeah, I mean that's a lot of the data providers because when you underwrite a home, there's a lot of things you need to account for: taxes, insurance, rent, rehab, values, and making sure that all those data points are accurate and are reliable.
It feels so analog. Because for me, it'll be like, I'll call my property manager, and what do you think the rents are? And again, like they'll have a couple dozen properties under management in the city, maybe 100. Like you're talking about property managers that have like a couple thousand houses under management in the city. So alone, their data, Google is a massive company because they're a data company. Like the amount of data that's available to from your vendors is just. This is why I feel analog. I feel like I'm coming from the dark ages.
Hasn't always been that way. I mean, going back to when we first started, rental data wasn't tracked in every market. A lot of times, we put on the MLS when a house was for sale, but not every market would log those. So then it was kind of like, all right, how do we figure out the rent? And it was relying on property managers to kind of be like, what do you think this is? But then again, you're slowing down the process a little bit, and then you're also kind of relying on one person's opinion versus kind of looking at data to make that opinion. To where now rental data in all markets is pretty efficiently found.
Wow, wild. What are some of the biggest advantages for Canadian investors looking into getting into the U.S. rental market through share?
I think affordability right now, based on kind of what I've heard, tough to find deals that are affordable and then deals that pencil. And I mean, the big one we were just talking about is operating the property. If you run into a bad tenant, it sounds like you're kind of stuck with it for a while and your cash flow is gone. Whereas, we're investing in landlord-friendly markets with professional management that can handle, any hiccups that happen. So I think those are a few of the initial biggest advantages.
Yeah, I think it's kind of getting lost on Canadian investors, how unaffordable it is here.
Mhm.
Kind of like the analogy, the example I gave, if Canada was a 51st state, how we were ranked for housing and incomes. Like our rents are really unaffordable up here. Um, yeah, it's just it's really sad. Uh, so let's talk more about what your plans are for share. So what's your vision on the acquisition side for share? Are there any new strategies or markets you're looking to explore?
Yeah, I mean, we've got a large scale coverage now in the markets we're in, but I think there's always room for expansion. I think as we're looking at more data, we figure out which ones we want to get into. In terms of strategy, I bring a lot of sourcing connections, a lot of acquisition channels that we can tap into to really bring in a lot more inventory to give our clients more optionality, find better deals, and more deals, to help scale.
Now, I mentioned how we have affordability issues up here, and that's why the whole basement aparting strategy, or basement suiting strategy became a thing around 8 years ago. When I started back in 2005, we were buying single family homes because we could cash flow a single family home. And you mentioned that like, do you transact on anything besides single family homes ever?
I'm not. I mean, we're working commercial real estate, yes, but I mean, within the single family rental umbrella of operations, it's all pretty much single family detached. So at different points, we would do townhomes, but for the most part, it's detached products. So single family, single lot has been the primary. And the
Can you
reason
talk
for
to
that,
why? Yeah, please.
yeah, I mean, the reason for that is, housing is always a need. It's a necessity for people. It's not like an office where you have to go to the office to work, as we've learned. Working from home, can work as well, but people need a place to live. And as the renter class is kind of growing and growing, grow out. Family will grow out of an apartment. Apartment supply, how many apartments over 3 bedrooms exist, and it's very minimal. So, when you have a family, you have a dog or an animal, you want that backyard, you want the fenced yard for the kids and dogs to play. You want to get in a good school zone, to school areas. So then your family stays. And that's what's created a resilient asset class. It's a stickier tenant. They want to stay longer. They want to keep the kids in the schools. And that's why it's been resilient, why we've specifically gone after the single family detached first. You do in duplex and triplexes and kind of the multifamily aspect.
Right. Because again, things have shifted here. Because I remember when I first started investing, um, one of the lessons I remember way back when looking at multifamily, for example, was you wanted as little or no bachelor units in your multifamily as possible because that had the highest turnover. fast forward to where we are today, because we have rent control, is, is Ontario landlords and probably BC landlords and Quebec landlords, they want turnover in order so then they can because the rent's deregulated between tenants, right? It's like Twilight Zone.
Yeah, I know we're in different countries, but it sounds like a foreign language.
Because like I, for example, I have a tenant just gave me notice, and I was like, yay! Versus like now I have vacancy, which is generally a bad thing for a business. And now I have to go spend thousands of dollars to get the house ready for the next tenant. Versus we have clients buying in the States turnkey tenanted properties because you don't have rent control, so you can get great rents on a turnkey rental property. Are we nuts up here?
It's definitely foreign concepts to me. Doing as much volume as I've done down here and just finding deals that make sense. It's kind of seems tough to operate. It's tough to make sense to do it.
Okay, so I have some basic questions for you. If you had to pick three U.S. markets that you believe are prime for single-family investment in 2025, which ones would they be and why?
I think Atlanta has always been. I mean, even since I started back in 2012, it's always been a consistent market. It just delivers. It keeps growing and growing. You look at the geography; it's getting denser. I definitely would stick there. Um, Kansas City's been a consistent market through a number of different strategies that I've been executing on through the single family rental space that's always been delivering, diverse, diverse businesses and economies, affordability, wage growth is positive. Um, this is a real consistent market that I rely on. And then Little Rock's probably, I think, under the radar one that I think is growing. We started investing there a few years ago, and I think it's going to be a market that a lot of people are going to be looking at.
Funny enough, I have clients in all three markets. Now, how do you decide what renovations to do on these properties?
Yeah, I mean, it kind of goes to the investor preference, but you want every house to be clean, safe, and functional to start with, and then doing the appropriate upgrades to kitchen, bathroom, flooring to where we think the rent level should be in that market. You look at the comps and you see, okay, if we want 2,000 in rent, do we need stainless here? Do we need stone countertops? What are kind of the levels that we need to do to reach that rent?
Right. So this is just a cold hard analysis that's done with a lot of data behind it.
Yeah, I mean, I think you mentioned, institutional versus retail investing, and that's the biggest part of it is you go, hey, here's the strategy, here's the buy box, here's how we're going to operate. Let's go. We're not going to do anything that's outside of it. Versus retail investing, where you find a deal and you can be creative with it. You could rent it out, you could flip it, you could try to do a subject to deal, like I know you're familiar with. Whereas institutional investing is kind of like one lane. This is how we're going through and executing.
Well, that's how you get it so that it's a passive investment for the investor.
Right. It's process and procedures that helps build repeatable actions so you can scale.
And again, you're talking about scale because you've done like what, 5,000 houses? How many?
One of that, but at least.
ChatGPT pulled up the number 5,000. I don't know where that came from. So again, you've seen this done on scale. So this is not, you're not making this up, not reinventing the wheel.
No, it's the same playbook. It's been repeated for over a decade, probably longer than that. But you know, I've seen it work, I've seen it scale, I've seen it executed, and seen the returns.
Okay, so for someone who wants to make their first investment, what are the first steps they should take?
Definitely research. Listening to a podcast like yours, educating yourself, or contacting a company like Share and learning more about markets, learning about the process, what to expect. Last thing you want to do is kind of buy a house and then figure it out. You want to have a plan of action going into it.
Mhm.
How am I going to buy it? How am I going to handle the situation that may come up? And working with a partner, coach to kind of help get you through that.
What I love about Share is like we have people like you now. You've done 2 billion transactions. We have our chief investment officer, Dimitri, who's, you know, 7 billions across his desk, 20,000 units. Versus for a retail investor, like I literally know I have personal friends with coaches, and like their advice to Canadian investors is firstly to choose a market, which is which is not easy to do. Like you mentioned, you were in like two dozen markets, which are probably all great. So you have to research that first, and then once you pick one, call 10 realtors.
What I love about the share platform is it's really simple. We're going to talk to you about the process. We're going to talk to you about the benefits of investing in this, and then we're going to talk to you about the markets, and then we're going to start showing inventory. And it's be like, hey, this is how this house is going to look, and we show you the underwriting, and it's not you're back in the napkin underwriting. It's detail, database, data driven, thoughtful underwriting of why are we taking this vacancy? Where do we think rent's going in a year or two? Where do we think this is happening? And why are we taking reserves out? And all that underwriting, make sure they understand. So it's kind of apples to apples. Next time we look at a different house, they know why we're looking at it that way. First, getting a house from a realtor and trying to figure out what's the rent, and then what do you think expenses are going to be, and hopefully what's my return.
And share, I believe we're at 23 markets right now. I think we just got a 24th. We keep seem to add a market every month or so. And so again, what I love about share is there's no bias for where,
Right. Mhm.
right? Versus you call a realtor, their bias will be what's local to them.
Right. I mean, we've got the scale to move into markets pretty efficiently and pretty quickly. And it really what I like is even if you're in the States, I'm in Tampa, but I like to buy a house in Tampa or a house in Atlanta and Austin, and you can do that through share very simply, and you don't have to go see the property or go hire a manager. You can still invest through them simply like that.
And then also, the vast majority of our deals are done off market, so we're not even using realtors on the buy side. What is what is so again? The scale of wholesalers is completely different in the states. How can you paint a picture for the listener on what it is on how many wholesalers, how many wholesale relationships you have?
I mean, it's probably over a dozen, if not more. And if the business evolves too, I mean, guys come into business, guys leave the business, guys scale the business where they're absorbing other wholesalers as well. But again, it's the technology that they're utilizing in their marketing and their underwriting to get deals locked up, and then getting it out to qualified buyers.
So again, like our listener won't have
Mhm.
context to how much volume these wholesalers do. How many deals do you think these wholesalers do a year? The ones that you're
The,
working with.
the good ones, I think, are doing over 1,000. The good ones that are large enough.
Okay, so I'm friends with the largest wholesaler in Canada, and he's nowhere near that. I don't even think he's over 100 deals a year. I think he's more like, I'll ask him later, but he's under 100. I've had him on the show.
Talked with a lot of even kind of regional ones, and it's the data is getting really good to where they're marketing to the correct people that are looking to transact, and then they have the technology to utilize them to lock up the deal, see the deal, and then market it out to the correct buyers. So, I mean, that business has grown a lot, and it's feeded into the institutional world of acquisitions as well.
So one thing that makes Share special is that our clients are able to they're able to buy fixer uppers through Share, and Share will coordinate the fixing upping, and then the client gets to benefit from the upside. I guess that was always the case for all your clients, but again, before I met Andrew, before I met Share, anyone who would bring you that investment, they would always want equity, right? Oh, yeah, in my experience up here in Ontario and Canada, like pretty much across Canada, I'm friends with the people who wrote the book on how to raise capital for joint venture projects, and typical is 50%, right? What do you have to say about that?
Yeah, I'm not too familiar with that structure. I mean, I think I've seen some where, somebody finds a deal and then the guy putting the capital on to flip it, they'll have a split of some sort, but not very common in my world.
And then Share doesn't take any split.
No, no, I mean, all our investors own their real estate outright.
Right. So the way I tell my clients is you're operationally passive, but because you own the house, you have to get your own financing. So woe is you. It's all the heavy lifting of, of pushing paper. You don't even have to see the property. So it's April right now. This episode will actually come out pretty quickly. What do you think the state of the market is today? These are interesting times that we're in.
I was kind of dreading this question. uh, depends on the hour down here right now, but no, I think it's why we invest in real estate. It's resilient. Housing prices aren't fluctuating like the stock market. We're investing in strong markets that are resilient. The single family rental class is shown resilient over time. It's it's one of the when the economy's down, rentership is up, so your rental demand is there. Like we were speaking earlier, housing is a necessity, and we need to fill that for people. So buying single family rentals is helping, support, people get into houses.
Hmm. And again, one thing I like about American investing is like, we can buy turnkey rentals, including with the tenant there. So the investor can actually vet the tenant as well. Are they in is their job in a resilient industry to like to a trade war? Right? If they're not, just move on. We can't do that here.
Yeah, that's interesting to me and kind of seems kind of crazy.
Yeah. And for the listeners' benefit, pretty much every American I talk to and tell them about Ontario, they're just like, that's nuts. It's just a foreign concept. Oh, and then also, like I'm good friends with many property managers, pretty much all of them. So again, remember the example I gave you? It could be 7 months or more of not getting rent as a landlord, but there could be a property manager, and pretty much all of them here in Canada still take their monthly fee, even though there's no rent coming in. Is that do you have similar experiences like that working in the States?
Now, typically, you're not collecting a management fee of any sort until the property's occupied and there's a paying tenant in there to collect the fee from.
And then renovations. So how are renovations done? How do you coordinate that? Do you get like three quotes? Like how are renovations executed on rental properties that need some work?
Yeah, I mean, so we're utilizing just like the property management companies, we're using, large scale contractors that have that buying power, like we were speaking earlier, to get costs down that are doing the rehabs, that are doing, probably hundreds of projects across the country.
Again, it's so different here. I can't think of any property manager that has that in house here on scale. So the other thing I noticed as well is that it's some things in the States are more expensive than up here. Like when I'm in the grocery store in the States, I was in upstate New York just in January. I was in Hawaii just recently, which is probably not a good example. But your groceries and your food's more expensive than ours. But one thing that's way less expensive is your materials and labor for renovations. I, can you comment on that? Is that just a thing about the States?
Yeah, I'm not sure the specifics on why those may be lower. Might be the workforce we have first up there.
I I've shared the story before. So I was having dinner downtown Toronto, and we just happened to be sitting next to two employees of one of the largest builders in our city, Tridel. And so I showed them my house in San Antonio, 2,200 square feet. I paid 265 for it, so it's like $120 per square foot, including the land. Now they work for Tridel, and so they said to me, we sell apartment building condominiums for like 1,400 a square foot Canadian. That's just to give you an idea of how much more expensive it is just to build here.
Yeah, I know I'm learning that.
I don't even know. Yeah, maybe you pay that in California and New York City, but that's probably it.
Maybe, maybe.
Do you know how to? Actually, this is a good question. Again, so this was new to me when looking at deals in the States and how due diligence is done. Like your property managers actually know property managers who do renovation work. They actually know what their run rate is, as in like if it's a $20,000 renovation budget, they know exactly how long that will take. Can you talk to that? Because again, that's not a thing here in
Yeah,
Canada.
I mean, that's something that's come out of, the funds buying thousands and thousands of houses and doing thousands and thousands of rehabs is understanding your measurables. How are you tracking things to know if you're working efficiently or not? And a good run rate is probably $1,000 a day. So if it's a $15,000 rehab, it should take a little more than 2 weeks to get that done. And that's just kind of an industry standard of realizing where you should be. Some may be better, some may be higher. But it's one of those metrics, to see if you're running efficiently is one of those things that's kind of transacted out of that institutional world of building portfolios of tens of thousands of homes.
Now, you mentioned efficiency. Up here, for again, in my experience, and also it's a common thing in our circles, is it's never on time, never on budget. And so it's always more time, always more budget. What's your experience like?
I mean, I can't speak for every contractor out there, but we try to use the best that are in line and following time, following deadlines, and working with groups that follow those as well.
How do you hold them accountable? Because here it's like we don't have many to choose from. How do you hold your contractors accountable?
A lot of times you've got a project manager that's running that crew, and they're the ones working on it because they know if this crew is not working or this deal is not working, and we're going to be buying more houses, well, they need to get things done to kind of cater to us to make sure we're going to use them again. So it's kind of that optionality of, okay, well, we're not getting things done efficiently here. We're going to move to somebody else that will get it done. So it's kind of carrying that, we've got the business that we're delivering here, and if you want a piece of it, we need to work better.
So it sounds like there's completely different strength in relationship. Uh, like here, we need our contractors more than they need us, generally, because there's so few of them. Uh, it sounds like you, as the investor operating company, have much more leverage in that relationship.
Well, when you're building a large scale portfolio, you need contractors, obviously, but you also need people that work well to keep things scaling correctly. And I think they see if they want to be a part of that growth with you, that they make things work and you can start working efficiently. And if people aren't, then getting people in that will.
Because correct me if I'm wrong, there's monetary penalty as well, because if there's no rent coming in and the property manager's doing the renovation, then they can't collect their monthly fee until it's
Right,
ready and rented out.
right. That would be a detriment for them.
I remember when I was in Atlanta, when I was telling him about how we still have to pay property management fees even though the place is vacant, he looked at me like I was crazy. He said to me, if you still have to pay fees when the place is vacant, what's the motivation to rent it out? So I think it's a good question for the listener to ask themselves as well. What is the motivation for the listener to for the property manager to fill the place? Because it actually is an issue. I actually know quite a few people who've basically had negligent property managers because they were still collecting their fee. They would just sit on their hands and not rent the place out.
That's crazy.
Yeah, because again, like you're able to monitor metrics. How would you be able to identify this as a problem in your portfolio?
Sorry to say that again.
How are you able to monitor that in your portfolio if a vacancy is going longer than expected?
Oh yeah, yeah, absolutely. I mean, you're typically looking at, once the property is rent ready, 30 days, where are we at? What's the lead volume? What kind of action we're getting? How many visits have we had? How many tours have we had? How many applications are coming in? And then you're looking at that. Anything past 30 days is starting to get more and more attention. So any sort of age inventory that's sitting out there is getting more and more attention and scrutinized and seeing why. What is it? Is it the marketing of the property? Is there something with the home that maybe needs to be adjusted? And or potentially pricing, but more likely it's one of the other two that we need to address.
Again, just a different level of automation that I'm used to and visibility.
If you build tens of thousands of homes in a portfolio, you figure out how to do it.
Ben, we're running out of time. Thank you so much for doing this. Any final thoughts you'd like to share with the listener? Us poor Canadians.
Yeah, I mean, I think it's a great time to look into share if you haven't and start exploring the U.S. single family rental market.
How can people follow you or connect with you should they want to?
You can follow me at LinkedIn. My name, Ben.
Thanks so much for doing this, Ben.
Thanks. Good time.
All right, friends, that wraps up another episode of the Truth About Real Estate Investing show for Canadians. Hope you got as much out of this one as I did. Remember that whether you're just starting out or a seasoned investor, there's always something new to learn, and it's always about building that practical knowledge base that gets you closer to financial freedom. If you found value today, please do us a favor and leave us a review or a rating, share this episode with a friend, or better yet, join our community of real estate investors who are taking action and making moves. And hey, if there's a topic you want us to cover or have there's a certain guest you'd like us to have on the show, drop me a line. My DMs are open on social media. Reply to this email that this have arrived on. I'm not hard to find. We're all about getting you the unfiltered truth to help you on your journey. Thanks again for tuning in, and we'll see you in the next episode. Until then, stay smart, stay curious, and keep building that future. Catch you later.